I wanted to kick this off quickly with an introduction. We've talked a lot today about the financial side of farming, and I think it's really important to remember that our clients fundamentally are farm operators. So, investors are absolutely our clients on one side, and we've talked about how many different types of clients we have. But fundamentally, there are people working the ground, and without them, we're not investing in anything, right? I mean, we're investing in farmland, and with that comes farmers. I've been asked several times over the past day and a half, how we get our leads, how we talk to sellers, who are we tracking down. And realistically, while we are more than happy to talk to anybody selling a piece of property, and we are building out Acre Pro and have a robust network of brokers, the vast majority of the people that I talk to on a weekly basis are farmers. Because what we're looking to do is find solutions that work for operators and for investors. And if it's not a win for both sides of that, then we're not interested. We routinely say no because it would work for one side, but not for the other. And I think it's important, especially closing out this conference, or the official side of this conference, to really put the focus on the operators. And not only how we provide value for them, but how they provide value and genuinely drive both the annual returns, but also the long-term outlook and why we're so bullish on farmland in general. And I have the privilege to speak with Matt here today. Matt is an Acre Trader farmer, so he is, his name is on one of our lease agreements, and he is in a really unique position just due to his scale and scope. But I will let you kick it off, Matt, if you just give a brief introduction of who you are, what you're about.
Absolutely. So my name is Matt Rohlik. I farm in Minnesota and actually here in Arkansas. So in Minnesota, we have a cow-calf operation, and then we do about 2,500 acres or so of rented land, and then another 2,500 of custom acres. This year a little bit more due to some cropping rotations for some people. And here in Arkansas we have about 4,500 acres down around the Stuttgart area. So Minnesota, we're corn, soybeans, and sugar beets. Down here in Arkansas, we are corn, soybeans, and rice.
Awesome. We'll get to the rental part in a minute because I think that's really important, certainly as it relates to our investors. But could you talk for a little bit about what you have to consider, the number of variables, both from the input side, crop optionality, not to overwhelm everybody, but just how many different things that you are juggling when making a decision on how to manage your, say, 10,000 acres?
Yeah, no, absolutely. I think the number one is probably labor. Comes to mind. Labor is a very, very tough thing for us, but there's probably 25 to 30 variables that we look at, from equipment to repair to all the inputs, seed, chemicals, fert, etc. And we're not just dealing with one person typically on each one of them. We've got a plethora of people that we talk to, normally probably 3 to 5 different suppliers for each one of them. So I know this week I was actually down in Arkansas on the farm here, and we're trying to wrap up, and I probably had 25 people come to the farm this week, partly because I don't live here all the time, so they're trying to see me, but it's a lot of different hats you need to wear at different times of the day.
And when you think about what type of people you need, I think there's this misconception about farming that it's just about hard work or hard labor. And if you could talk a little bit, if you think about both the technology involved in farming, the planning involved in farming, the management involved in farming, what type of individuals or teams of individuals make a good farm system?
Yeah, no, that's a great question. So there's an analogy that I threw out to our banker a couple years ago, and if you talk to some more like-minded people like me, what we have for a visionary, especially being young, there's a lot of land that's going to transition in the next 10 years, a heck of a lot of it. So we're trying to get in the best capital position that we can do to do that. But as much as I love to sit in the combine or sit in the tractor, that's not the best use of my time. The best use of my time is sitting in the office figuring out deals. I can tell you for certain, just me spending time in the office probably saved us almost $1 million across our operation this year, over inputs, and we're talking from fertilizer, seed, down to poly pipe for the waters. Just all these things that we could cut and think about and manage to different stuff. But my vision for the future is, not to sound arrogant, but we're kind of the CEOs of our farm, our operations. We got a multi-million-dollar operation we got to run. We've got a lot of responsibilities to go to, and I want the best board around me. That's what I start to think about. It's really my board. So if it's my banker, my accountant, my land developer or manager, the actual farm manager, there might be site-specific farm managers for verticals of crops that you're growing. One thing we're starting to see is I need a little bit more specialization in what we're doing, anywhere from equipment to the actual crop being grown. And then, you think about the agronomists and the different retailers that you're partnering with and all these things, because if they bring you bad information, it takes a heck of a licking on a portion of your crop. I mean, we had one of our suppliers make we went with them, so the decision's eventually on us, so that's the CEO move we have to make as farmers, but it costs about $280,000 this year in a wrong decision on seed. And that's a heck of a hit, even though the crop is as good as it is. So, that's kind of our vision for the future is who are we putting around this conference table, if you will, of our board members to help support our business.
When you're making that decision of sort of who to put around you and how to make those decisions, where does land consideration come in? So when you're looking to expand, how do you look at land?
Well, that's probably actually almost number one or number two. And the reason is because everything else falls behind that. And what I mean by that is, depending on the land is going to choose what my financing are, what my crops, fertilizer, everything else that's getting put on there. So, we evaluate that land as farmers to the best of our abilities with the tools that we have. Now, I'm pretty excited for this tool you guys actually have coming, but, that's what we do. We evaluate to the best we can. Especially if we're taking over for somebody, we picked up 350 acres this past year that there was no data on this thing. And we walked into a disaster. We got it halfway turned around. Now we know what to do for next year to make it even better. But, that's a really tough decision. It also drives all of our input decisions, which is a big thing. And you have to understand how much you're going to pay for something and what is that ROI, right? Like, what is the percentage of ROI that you're looking, whether it's gross or net?
So when you're considering a property, and we've talked a little bit, Sky talked at length about the difference between buying high quality ground that you know what you're walking into and paying more versus taking a bet on something that you may need to go in and do soil samples and tile out and see what happens. How do you judge those decisions when you're planning for expansion going forward?
Well, the first and foremost thing we do is look at what the comparable is from we like to call it biogeochemistry approach. So looking at the biology of the soil health, what is the opportunity that carbon's becoming a huge thing. So not only besides carbon, but other environmental assets, which could be water. Obviously, if you're in California, there's a huge problem out there. But any of these environmental or nature-based credits and assets, how does that land lock up with it? What's the capability of us entering into a long-term agreement? And then how much does it compare from a soil site perspective, a drainage perspective, and everything else from our other land? And then we look at circumference from the farm, distance.
I think it is worth mentioning, at least in passing, when we talk about poor farmers versus good farmers or skilled farmers. I think having a conversation, and granted, we bring the cream of the crop here to, have a conference, but realistically, just listening to Matt talk, I hope you begin to pick up on the differences between the way that we talk about land and the way Matt talks about land, and just talking about the biochemical makeup of the soil. Those are the type of operators, and regardless of size, whether you're at 5,000 acres headed to 50,000, whether you're at 10,000 already, it is really important, I think, to find operators, and part of our diligence is finding and then cultivating relationships with operators like Matt, exactly for that reason. And realistically, when we talk about doing that remotely, you can talk to Matt for about 30 seconds and find out that he knows way more than me about farms, and that goes a long way. On sort of your relationship with the ground, how do you manage ownership versus leasing of ground?
That's a really good question. As you can see, I'm not that old yet. At least I hope to be not that old yet. So my folks actually farm. My dad didn't want us to farm, so I said, I'm gonna go be a banker. So I went for finance, believe it or not, and I have an accounting and a business minor. I got pulled back into ag. I worked for John Deere for actually 11 and a half years. And then I got an opportunity to farm from two of my clients. I said, heck, this is one of an opportunity because Dad doesn't want us to. And in that same time, I actually went to go work for a startup out of San Francisco in the aerial imagery space. I was kind of a pioneer in that arena. Did North American sales for them, and then I did a merger and acquisition for them for another company with a bunch of investors that I know, and led that for about 2.5 years. And in concert, found the right people to help manage or not manage, but run the farm while I'm not there, do the labor, so to speak. And then, yeah, it's been quite interesting.
Yeah. So I guess one thing that I really want to touch on, if you watch any of our webinars, we talk a lot about crop optionality. So, when you think about ground, you have sand involved with the ground, you have clay involved with the ground, you have loams involved with ground. You as a farmer, how much do you care about crop optionality? And then how do you make determinations looking forward, when you're either going to set up a long-term, a 5-10 year lease, or buy ground yourself? How much does that matter, and how do you decide when to transition, when to, hey, I'm going to plant a couple acres of pinto beans? What does that conversation look like for you?
Well, a really good marketing mentor of mine said to me, he said, when you can learn to shut off emotion to become a good marketer. It took me a while to figure that out, but long and short of it is this: we are already sold about 40 to 60% for next year already. So, which is a little aggressive, I know, but that has got me through every year and allowed me to grow 30 to 40% every year. So making sure we're locking in inputs and locking in at least a portion of the outputs, managing that with risk, with crop insurance and other types of things, has really helped that perspective. And then that just comes back to, okay, if we've got this many crops, where's the optimum place to place these crops on this land? And what is our ROI going to look at?
What's your biggest headwind to going to the scale that you want to? I guess first I should ask, where are you currently as far as acres under management, and where do you want to be?
So we're about just shy of 10,000 now. And we've pretty much accumulated that in the last 6 years. My goal is to be 20 to 30,000 in Arkansas and 20 to 30,000 in Minnesota. That's my goal in the next 15 years.
What's the biggest headwind or hurdle that you're going to have to get over to get there?
Oh, capital. But by far, the thing is, a lot of the farmers that are in their 50s and 60s and 70s, they held on to the land too long, is what happened, and they didn't let the younger generation step up and build that. If you look at just from 2006 to now, it's 5x the capital expense to do what they did in 2006. So when an operating note used to be, $400,000 or $500,000, and now we're looking at millions of dollars, it's getting harder and harder to make that. And the people that farm, like I watched a lot of guys my age come in 2012, and there was super good prices, and I'm like, man, I wish I could farm. And by 2015, every single one of them went back to a office job, just because they couldn't handle the stress and the cyclical cycles that are involved in agriculture. So you got to be in it for the long time, but you got to make a lot of level-headed decisions and understand, where you're at. What's your bottom line? Like I could ask farmers all the time, what's your bottom line? And they said, what do you mean? I said, where is your costs at? Most people can't answer that. That's not good. When you're my dad's age, and no offense to any older people in the thing here, but my dad is 62 years old. He can farm the way he wants to for the rest of his life. And that's no derogative to him. He knows it, but my brother, who's taken over his operation, can't farm that way. They just can't. My dad's got enough money now that everything's paid for, so, if he gets a crop in, great. If he gets it sold, great. Whatever it is, what it is, but my brother can't operate that way. There's such a gap between the number of age. Here's a local statistic I'll tell you, just to understand a little bit of the scope. When I worked at John Deere, I dealt with 480 different clients. I left in 2015. 40 of those 480 were under 40. And I dealt with roughly, give or take, 900 and some odd thousand acres. That's what tells you what kind of scale this thing is going to go to.
I think that's also a really good point when we talk about the transfer of land. I think sometimes we hear these terms and it says, oh, I'm at a conference about farmland investing. Of course, we're talking about land turning over and exchanging hands. The average age of the American farmer is 59 years old today. When we think about the amount of land, and you've heard this several times from several speakers, when we talk about how much land is going to change hands and how much of that is not going to be the children of the people farming it, Ben, I don't know, Matt, if you could speak a little bit to, I think that your father telling you, I don't want you to go into farming is something I hear all the time. I guess why is that, and how do you feel our generation is going to step in? I mean, is it the children of farmers? Is it other people? Is it cooperatives? How do you put that together?
Oh, that's a really good question. I think it's going to be a blend of both, a blend of all. We look at, there's a farm that I do some custom work for. Hopefully someday get to take over, but I have done more and more custom work. We have a very good working relationship. He's 30,000 acres. I think he's right at 60 maybe. He's got nobody that wants to take over, and a lot of it is just the everyday, the mental pressure and stress you have to go through, like any business does. I'm not farming. A lot of it's still up to Mother Nature, which is out of the control, obviously. But I think, our generation, the whatever we're called, the late millennials or the early millennials or Gen Xers, I don't know, whatever we are. We're in this group that at least the tail end or top end of us is we still like to do business the old-fashioned way. Like, I don't mind text and I don't do this, but I don't do Snapchat. Or if I do, it's because of the guys who are working for me. I want a phone call. I want an in-person meeting. I want to know how things are going. When we got out of high school, it goes back even to that. Nobody knows how to balance a checkbook anymore. Nobody understands finance. And if you aren't going into that world, you don't know it. You just don't know it. And that's not being derogative. It's just the truth. I got a 17-year-old daughter that it's like, where did the money go? So it is what it is. But it's not just her. It's a lot of people. But, I think just not being... that's where I think, if I look at a long skill haul, I'm going to have a CFO someday. There's no doubt about it. I'm going to have a COO someday. And my goal is to work on relationships and check people's numbers, make sure things are going, and find really good help that are going to work a specific job, and this is the time they're going to do it, and this is how they're going to do it. And if you can't get to that entrepreneurial mindset, it's going to be tough. And a lot of the kids that want to farm are not entrepreneurial or business oriented minded. It's actually a lot of the people who do startups, and that's tough. And it is what it is.
So I definitely want to leave. My goal is to keep this about 20 minutes so we could open up for questions. I'm going to throw one at you. Just might be taking a risk. I did not prep for this one. Why AcreTrader? What role do we fill? How do we work with you? You predate my time here, so I was not on the other side of that lease agreement. What does that look like for you, and where do you see us working together going forward?
Well, you are my most expensive rent. I will tell you that much. With that being said, you are actually my most expensive rent, but there's a couple things that I see. It is a very good farm, though. It was our #1 rice farm last year. It was phenomenal. It's got good drainage. The people you have on the ground that work with us, they check in with us at least quarterly, which is super good. The lease structure is very easy. I almost have a harder one with some of my other landlords than probably you guys. One of the best things I think of is I think AcreTrader has an opportunity to fill a very large gap. And I spoke about just a little bit briefly. And a lot of these families, and we're running into this situation back in Minnesota right now. There's 420 acres we farm. It's the parents died 3 years ago. There's 3 siblings. And now all of a sudden I got a call 2 days ago that one of the siblings' husband needs the money. So they want to sell. And land has gone up significantly right now, and there's a good return on investment. They don't understand capital gains tax that they're going to have to pay, but that's another thing. But in a situation like that, AcreTrader comes in and really manages it for them. So those, you guys sell the land to the LLC or whatever, but those people that still want to be part of it can still have that connection to the land, right? Like I still own a little bit of dad's farm or grandpa's farm or whatever it is. But it's just a different scope than a land investment firm coming in and just buying up all the land. And I don't want to say it's emotional because it still is business, but at least being openness to what's happening. And that's really why we like AcreTrader and why we pass along deals to you guys when we can.
I'll take it. Awesome. I will open it up for questions. If anybody else has anything for Matt at all, you have a wealth of knowledge in front of you, so fire away.
Matt, with a lot of the conversations today have touched on bringing institutional capital into this space, and the sale leaseback opportunity reduces the hurdle rate for people who want to get into the business. Are you actually seeing younger people move into that because of that evolution?
Yeah, I would say there is. I told Ben this a little bit earlier. One of the farms that I bought, so in Minnesota, we actually have very high taxes, especially where I'm at. In this farm that I bought, the payment comes out to about $325 an acre. And then I got to tack another $100 on there for taxes. So it's like paying $425 an acre rent. So when you look at, the OpEx and CapEx of that investment, you either gotta run it through a lot of land or have a lot of money backed up to do it. And when I can come in with, whatever we're doing for you, a 3-4% or whatever it is, that's a realistic expectation. So if you're buying it for 6 and this is you're paying 2 or 3 or whatever it is, it helps buffer, if you will, and lets the cash flow still work on your equipment and discount buys and everything else. So yeah, I'd agree with that.
I'm just curious if you're thinking of expanding your cow-calf operation at the same time as your row crop, and if there's synergies between those two?
My cows are my babies. They're probably my highest tax write-off. I'll tell you that much. Sometimes my wife says, "Do we really need them things?" But it's fun to get on the back of a horse like twice a year and go round them up. No, seriously. So what's interesting in the livestock market is we are looking at off-the-farm feeding. I will always have a manageable herd. If we need to get somebody, we'll get somebody. We've hired a lot of South American H2A workers, and they're fantastic. They've been wonderful for us. And there's a gentleman and his wife that are probably going to move over in the next 3 to 4 years, and I'm going to let him run that operation. He runs about 1,000 head over in South Africa at the moment. I would love to be at least 500 to 800. We're only at 100 now. If the goal behind that would be to go IP, or identity preserve, and then supply chain all the way through. So we would take it from, we raise some non-GMO corn or conventional corn to run through the cattle. They tend to do a little bit better. And then my brother and I have a feedlot that we run it through. But if we can supply if we can measure it from the ground all the way through, and then measure all the environmental offsets off that, our goal would have, like, let's do a mass balance to whoever we're selling it to, and then they can report that to the packaging. So that's the intent.
We have time for one more. this may be somewhat of a blunt question, but you know, amongst farmers and landowners, when y'all are alone and together and things like that, is AcreTrader something that y'all speak up together? Do you hear them anecdotally speak about it? Do they say it with a little hate in their names? You know, what's the overall perception in the real world of the farmers who assets we're acquiring and dealing with? Do they enjoy that, or do they dislike that?
So I haven't heard anything negative about AcreTrader. There are investment firms that I do hear some negativity about, to the fact that they have had to lower their price by, I know an example here in Arkansas, unfortunately, that has had to lower their price $80 an acre just for somebody to farm it. And that's an institutional investment. I know what they bought that land for, and I know what their return is now, and I don't know how they're going to make that work. So that's not a good situation. I'll tell you an example that we got going on right now. We farmed 300 acres that we picked up this past year across the road from our farm, and the landlord was over yesterday to see me. We jumped in the side by side, and we're doing a bunch of capital improvements to his land, and he said, I think my brother wants to get out. And his brother's a lawyer in Little Rock, super good guy. Just, he said, my son doesn't want it, and if something happens to me and it goes to my son, I don't know what I'm going to do. So there's an opportunity. I did mention it to him. I said, well, there's this opportunity if you don't have enough capital to buy that portion out from your brother. So I think that this is just my personal feeling based on the business deals that I've done up till this point. I think that AcreTrader is the most non-threatening, friendly to the farmer land investment firm that's out there. And I don't just say it because I know Carter and them. It's like the guy that manages the farm down here for us that we deal with through AcreTrader. You know, he called up the other day and said, hey, what's going on? How are things going? What are yields doing? You know, what capital improvements do we need to do? And it's kind of like a family feel to the land, without having family own it, I guess, is the best way to put it. So.
Appreciate that, Matt. The only thing that I would add from the diligence side, I spend most of my days walking around the office talking to farmers. I am the white noise of our office, and apologize to all of my colleagues for that. You know, we mean it when we say we only work deals if it's a win for the operator and for the investor. And that means we say no, at least on the row crop side, somewhere between 95 and 99 out of 100 times. And that's not a joke. That's not, I mean, I say no to 95 opportunities to find one to say yes to. And that's in large part because it's very difficult to find opportunities that are a clear win for the investor and a clear win for the operator. And I think that assuming that we stick to our culture and our guns and maintain that going forward, you know, I think we'll be able to continue to build relationships like this. And again, really appreciate the time, Matt.